Had around a 150% play on SPY today, and this is going to be my breakdown of a small account strategy as well as a big account strategy that I think works very well in these current market conditions. So today I'm going to be going over that and showing you guys how I actually analyzed all this. I'll give you guys a brief introduction into this strategy. It's mainly just supply and demand mixed with ICT, but more so just breaking down overall market structure and understanding where the market wants to head. So starting off, what is the market doing here? This is the 1 hour time frame. I want you guys to see what the market is doing. What are we doing here? Pretty simple stuff. What are we doing? We're going lower, right? In simple terms, that's what we are doing. But what I want you guys to really look at is, what are these highs doing? What are the lows doing? How is it forming? Is it forming a structure? And here we have a downtrend forming, right? And mainly what I want you guys to understand is, look at the highs, right? What are the highs doing? Every single high that is being made is lower than the previous one. What does that tell me? That tells me the market wants to continue down. Well, every time it pops, it makes a high, it creates a lower high. It doesn't go past the previous one. And when it does, that's when we know that the market might want to continue higher. When we're making our lows here, each low is lower than the previous one, all the way up until this one right here. This one, the market decided to have a higher low, right? We had a higher low mixed with lower highs, telling us, hey, the stock is, compressing. It's looking for a breakout soon. Doesn't mean draw out your trend lines or whatever. It just means keep that in mind. You don't need fancy trend lines. I personally don't use trend lines at all, or even that often. But that's one thing I want you guys to understand is, you made a higher low here after making all these lows for the past week almost. You make your first higher low on the hourly time frame. What is that telling you? It tells you that the market wants to continue higher, right? The market wants to continue higher, and it broke those lows. It created a lower low once again. So once we saw a glimpse of light, once we saw that the market wanted to continue higher, it broke those higher lows and wanted to continue down. Now, since we were having lower highs all week, what is the one assumption I could get? I want you guys to answer this in the comments right now. We can assume that the market wants to make a lower high. Just based off previous market structure, just looking at how the market wants to react, it wants to still continue down. And this is where the strategy came into play for me. On the 1 hour, I looked to see where the stock made a significant move to the upside. And that just happened to be around this area here. And the way I got that exact zone is I went onto the 5-minute chart and I looked for these types of big candles. These imbalances created by the market. And when I say imbalance, I mean that the market moved so fast off those levels that only institutions are going to be able to make those types of moves. And you guys can see how true this level stayed, right? Pulled back to this level here, pulled back to this level, bounced here again, broke through, and then it turned into resistance, right? Previous demand turned into supply. If you guys don't know how to draw these zones, go watch my YouTube video on how to draw the zones, how to execute them, and how you can play the flips, because I go over the psychology and all the back end stuff there, right? That's where I go over most of this stuff. So once you have this, right? Once you have this all set up, what is the last part of the puzzle? I want to see a fair value gap, right? Based off of some sort of displacement, right? And I'll drop the YouTube channel where you guys can learn all that stuff from. He's the one who created the strategy. What did I see here? I saw that there was the higher low that we broke. Once we broke this market structure, right? And let me just give you guys an example again here. We made the higher low, we broke this market structure, right? The market had a sharp move down, telling us it did not like this move. It made a sharp move down through this low, and then it pulled back on this candle, leaving this gap. What is sitting at this gap? This is a fair value gap. What is sitting at this gap? Unfilled orders. Unfilled orders are sitting at this gap. The market made a swift move down, came back to fill up some of those levels, and then you can see it continued back down. So what do we have here? We have the previous demand turned support. On top of that, we have those leftover orders from the fair value gap, and it traded into it. The market broke this low, and then it had a swift move back up. That's telling us it's running into supply, it's running into those unfilled orders. And that for us creates a high probability setup, low risk, high reward setup for a short. How do we exactly play that? So over here, I'm going to show you guys my actual entry. I'm going to pop it up on the screen right now. There you go. We entered SPX puts at 37.20, or the 37.20 puts at $1.35. Lottery size, and I was only in 3 with a tight stop loss above an invalidation of my zones. And you guys know, if you guys know me, you know I do not enjoy playing 0DTs at all. And when I do play them, I play them with very small size so small that if they go to 0, it doesn't affect my day at all. So that's what I did. And then now you guys are going to see me updating the play as we rejected. And I want to show you guys, as we traded into these zones, things you want to look for, right? Why did I enter this? I entered this play at 12:02, right? I entered right around this candle here. Why did I enter here? Now I'm going to explain that to you guys right now. Don't worry. When the market traded into my supply, into this dark rectangle here, which is the fair value gap overlaying the supply, what does that tell me? I see this huge sell order right here. Not sell order, but this candle that shows me, hey, we had insane amounts of push up, and then we just had a really sharp sell-off right here. We had a really sharp rejection. This red candle is showing me that, hey, we're having a lot of trouble getting above this level here. That we are having a ton of pressure. It's having a hard time breaking above this level. And when you're trading this, you want to look at the candle bodies as well. How are they reacting? This candle body, very limited downside, pumped up, huge wick. This wick was what? Yeah, around an 8-point wick, right? 8 points right here. So anyone chasing calls up top here, right, like many people did, because what are they playing? They were playing this breakout. They were playing this breakout of this previous high, and they just got wicked on. What does that tell us the market makers just did there? They have taken so many orders. They have messed over so many people right there on that single wick that those people are now trapped. The market makers were buying down here. They bought after we broke that and captured liquidity and pushed it back up. They are trapping people. And the way you guys can tell is, think of it like this. Every single candle in the stock market is a display of human emotion. Once you see a candle like this, if you are in calls, what's your immediate reaction? You're looking to sell. You want to sell your calls. You want to sell if you bought shares. You want to sell your shares. You want to protect yourself from downside, because that turned into a failed breakout. The price is having a hard time breaking up. There's so many wicks at this top telling you, hey, every time it comes up here, it's filling sell orders and coming down. So that's when I decided to attack and take my short position. I'm going to show it on screen right now. There was my short position. Only 3 contracts, and that is why I entered. And you can see we pulled back, and then we came back here. Once we retested, what happened again? We had such a hard time breaking above that 37.22 level. And then we get this nice rejection. This is a candle I'm looking for. I'm looking for a candle where it's a bearish candle. This candle here, huge wick to the top, and then we filled in this bottom wick where we were previously bouncing from, filled it in with a red candle. We take out this low, have this nice drop. We retrace a little bit, pretty much around 50% of that candle, which is also like around this high. No candle close above this previous high, and then knifed down, and this is where we sold for 159%. And this is the strategy I really want to introduce you guys to, and I'm going to be showing you guys over the next few weeks. Is I like to see these demands turning into supplies. I like to see supply zones, and then I'd like to see them inside of a fair value gap. I want to see the fair value gap and the demand turn into supply, or just the normal supply. I want to see my zones and these fair value gaps overlap each other, because that just provides me extra confluence. It gives me a very high probability setup. What does that do? Why does it provide a high probability setup? Because I know there's unfilled orders. I know there's orders also sitting there just from my supply. 2 different strategies check out. Let me know that, hey, there are orders sitting at this level, and that our risk is already predefined. It's not going to continue any higher from here. What happens? Rejects, you catch a very nice move to the downside, especially on this setup. You guys can see, where did it top off? Right at the top of the fair value gap and supply zone where they overlap. That highlighted area right there is what we want. That is where we add our position, and you catch a nice move down. So if you guys want me to go more in depth, and if you guys made it this far in the video, make sure you guys scroll down, pause the video, go drop a like, then we'll go from there. But you guys can see this strategy works, and it might just be the fair value gap, it might just be a supply, but when I see 2 of my favorite strategies cross over and create a setup I know that it's a very high probability setup and that it's going to continue to the direction I want it to, just because of that. And the fact is, if it doesn't, my risk is already so tight and I'm properly positioned, I don't have to take a risk. I'm not really risking too much to make a good amount. I risked around $400 to make $400. Very simple. And that's what we got here. So a quick summary of this strategy is, first of all, go watch my YouTube videos on Zone. Go watch the videos on fair value gaps by the Inner Circle Trader. And then I want you guys to be able to identify the market structure. What is market doing? What is it doing? Is it creating lower highs? Is it creating lower lows? If it goes to create a low or a higher low, is the market breaking? Does the market like that? If it's trying to create a reversal, if it doesn't, how can you capitalize off it? I came in with a short bias. The reason I hopped into this play is because we were unable to keep up with the higher lows. We broke down below that, telling me that the market makers wanted the stock to continue lower. So when we had this push here, I knew they were just getting rid of their sell orders and pulling it back to where they could buy lower and send it higher, right? You guys have to remember, these algorithms in the market makers, their main goal is to lose you as much money as possible, because that's how they make their money. So just remember that next time you're hopping into a trade, make sure you analyze the structure. Make sure you analyze how the market is going to react at a certain point. Is it making lower highs? Is it making higher lows? What is it doing when it creates a higher low after it's been making lower lows for so long? Oh, it broke through with a displacement, broke through aggressively. That's telling me it wants to continue down, and then you could catch a reversal like this. If you guys enjoyed this video, make sure you guys drop a like. And I will be going more in depth into the strategy over the weekend, back testing, showing you guys more. But so far, this is the best low risk, high probability setup for small accounts I have seen. And if you guys want to see me trade this setup, want to see me trade live in voice, and on my Discord, I hop on voice, I teach you guys everything. We have daily classes. If you guys want to join that, make sure you guys click the link in the description. Go onto my Twitter and DM me. If we do have any spots, I will let you in. Right now, we are completely booked. There is no spots left. But DM me on Twitter, and I'll see if I can make anything happen for you once we open up spots. So, hope you guys enjoyed this video. If you guys would benefit from any of this stuff that I'm teaching you guys, or benefit from my YouTube, please consider subscribing. I'll see you guys in the next one. Peace.